back with Market Sense right here on ET. Now, on unexpected lines, it's been a mildly positive start to the European markets. James Knightley, senior economist at ING, now joins in on the phone line from London. James, to start off with, you seem to have caution which has replaced the recent rally because investor expectations are really hinging on further quantitative easing by the ECB and the Bank of England. Do you think we can expect any concrete measures?
Yeah, I think we will be getting something happening in the next few months. Of course, first up, we've got the Federal Reserve meeting as well. And I guess in terms of the recent data flow on the US has been a little bit more upbeat. We've had stronger retail sales, stronger industrial production as well. So the US economy perhaps isn't as weak as people had been fearing. And now we're starting to see more or greater confidence that the ECB will be doing more in terms of bond buying to try and support these peripheral governments and peripheral economies, while the Bank of England yesterday again suggested that further quantitative easing could be forthcoming in the UK given the economic uncertainty. So you know, a combination of some better data plus the support from further quantitative easing is certainly buoying markets, I would guess, this morning.
Right, in light of all of that's been happening in the banking sector, there's been quite a bit of negative news. How do you see that shaping up?
Yeah, I mean, I think the banking sector is under a lot of pressure now. Authorities are wanting to deal more aggressively with what they see as bad practices within the banking sector. So that is something that's clearly a key theme. I don't think it's going to impact dramatically on the growth prospects for the economy, so it is very much sector specific. But if we can get the ongoing improvements and we can get ongoing improvements in credit availability, then that's fundamentally going to be good news for the global economy.
Many thanks, James, for taking the time out and joining in. So the European markets, which just about started off on a firm note, seem to be finding their ground and have gone into the negative territory. So give it a bit of time to stabilize. But away from that, let's take it right back to our own markets. Absolutely nothing happening here. So Rajat, is there anything that you've identified?
I would say that looking at the kind of weakness that you find in oil marketing companies, especially HPCL, if diesel prices, nothing is done about that, then HPCL might well be a big loser. I would suggest selling into it with a target of 304 and putting a stop loss above its resistance level of 319. And Reliance continues to show quite a bit of strength, so I would suggest that you now put a stop loss below 807 and look for a target of 819 and 823 on the upside, and 808 being the major support now. I would suggest a stop loss below 807. So Reliance long and HPCL short are the two ideas that I can provide as of now in this listless market.
Some of the pharma stocks are doing pretty well today. Cipla is in the green. Even some of the smaller ones like Unichem Labs is in the green firmly. Rajat, have you looked at charts of these Cipla, Unichem of the world, or any other pharma stocks? Most of them are witnessing a defensive action by investors.
I would say that if you look at them, I mean, Cipla recently posted a 2-year high. I think that way it is definitely showing considerable momentum. But if you look at the Indian pharma companies, be it Divi's Laboratories or Sun Pharma or Cipla, these kind of companies, even Lupin for that matter, if you are trading, if you are taking a short-term bet, say you are betting on Cipla now and looking at a price of say about 375 to 380, maybe that would be achieved. But looking at a stock that has been rising from 300 levels to about 360 kind of range in a very short period of time within less than 2 months, I don't think they are really defensive. I mean, pharma as a sector is held as defensive, but at these prices, if you buy them for any kind of short-term investment, they might be risky. But from a trading perspective, yes, you can definitely do that. Put a stop loss below say 347 or 345, wherever you are comfortable, and buy into Cipla. Maybe you will get a price of 365 and above that 375 to about 380.
Well, let's shift focus. Delayed and weak monsoons in India have not only added the woes of farmers and government, but also the seed companies. To understand what is the impact of weak monsoon on sowing in India, We're joined by C.Mithun, he's the ED of Kaveri Seeds, and even Prabhakar Rao, chairman of NSL Seeds, joins us on the show for a discussion. Mr. Rao, come to you first. You have about 1,000 crore in sales in this particular space and enjoy a fairly large market share. Because of weak monsoons in several, agriculture-led states in India, how much significant impact are you witnessing in the business?
Yeah, I think there is an impact to the extent of about 10% on the sale of seeds this year. Fortunately, some companies like ours were not hit to the extent of the full 10%, while others, I think, lost even more than 10%. The 10%, therefore, is the average number for the whole of industry. Those companies with a better brand equity, I think they could manage with about 4-5% drop in the sales, while those, I think, the others might have lost up to 20%.
Right, that's the word, Mr. Rao. Let's take it straight to Mr. Chand to find out what kind of an impact he's saying. Mr. Chand, if you could just quantify it for us in terms of delayed sowing, what has been the revenue impact for you?
Hi. As rightly said by Mr. Rao, it has been down by more than 10% this year. And the good branded quality seeds have been preferred by the farmers in this regard. And during these drought conditions and this impact, we have increased the revenue by more than 100% compared to previous year. So this was a very good year for us in terms of the revenue generation. And as other companies have taken a lot of it in that, and most crops like paddy and the crops which are under the irrigated segment is taking a hit, and it may continue. We need to wait for another 1 or 2 months to see the actual impact on these crops.
Mr. Rao, of course, this time around business is impacted, however little for your company, but we understand that you're also in the process of raising funds from the primary market via the way of IPO. Do you think that business impact this year around could also lead to some delay in your IPO, or the fundraising plans are still on track?
Actually, we are considering this possibility of going for an IPO, but we have not yet frozen any timelines for that. It is just in a kind of a internal debate stage. So, but in fact, I was referring to the drop vis-a-vis the budget, because we have planned for a growth of about 30% vis-a-vis last year top line. So I was referring to this 5% drop against the budgeted numbers. As compared to last year, in any case, we have registered a growth of more than 25%.
So, Mr. Rao, can we expect something to fructify in terms of your IPO? I know you said that there's no definite timeline, but say within the next 6 months?
That, I think, I'm not sure about that, because we are still, as I mentioned to you, we are still in the process of debating this idea and getting ready for it. So once we are ready, I think we'll definitely, then I can predict the timelines. At this point of time, we are not ready to speak about any timelines.
All right, Mr. Rao, thanks a lot for joining us. Mr. Chand, before we let you go, there's also, something developing on the government side as a target of seed replacement side. 40% is what the government is actually targeting. Do you think that that is a realistic growth rate?
Yeah, it is a realistic thing, but it's a very aggressive move what government is taking, and they need to educate a lot in terms of the farmers' education, and even there should be a lot of penetration of hybrid seeds so that the average of seed SRR may go up. But it's a quite achievable task, but a lot of measures need to be taken into it.
Mr. Chand, appreciate you taking the time out and joining in with as to what the deficient monsoon means for your company. So both the companies clarifying that this time around the poor rainfall has been a threat to the seeds, but by close to 10%. And now they will be waiting for next 1 to 2 months to see what the impact of a drought is going to be. But back to the Indian markets, and let's hear out a prominent voice. Vallabh Bhanshali, in fact, caught up with ET-Now's Nikunj Dalmia, and he believes that the Indian markets have rallied all the way to 53.50, and despite all the talk of policy inaction, the sentiment still looks resilient.
People have to recognize, and for 8 months, I think, starting with your show in November, I talked about the markets have bottomed. When things come to book value, there are a number of stocks which are below net worth today. they have more value if you, I mean, many times more value if you just simply, took the company into liquidation. So the country has essential wisdom. A lot of investors are looking at the markets. And they still believe that, with their depreciated rupee also, these assets are very valuable. So I think we shouldn't get excited by where the market is. I think we must really feel sorry that it is not where it ought to be.
The investment cycle in India is broken down. Do you think that fixing the investment cycle should be the top priority for a government, because if the investment cycle is fixed, it will take care of a deficit?
100%. It takes care of everything. It fixes my rupee. The moment I fix my rupee, my credit, my trade balance starts changing. People's confidence starts coming. In the local investment cycle, the forex situation, everything starts reversing. It's just one-point agenda.
So it's all about the policy regime.
It's all about credibility, I would say. I think, we have lost the value of that expression itself. And that applies to every institution too. Whether it be, a professional like me, whether it be a regulator, or it be the government itself. We ought to think, what is the essential social contract that we have made? Is a regulator there only to regulate? You can't regulate something unless it is growing. So whether growth is written in the Parliamentary Act that created me or not, it is assumed, it's presumed. We need to worry about it. We can't stifle it.
Okay, that's a view on the markets from Vallabh Bhanshali exclusively with ET Now. A quick break right here on Market Sense, but on the other side, IDFC brokerage report says that growing systemic risk in the global tobacco industry may lead to a derating of tobacco stocks. ITC cites 6% in trade. 3%.